Good afternoon, everyone. In today's video, we're going to focus in on what I think was the overall theme for today, or the headline that dominated the markets, which was around the Consumer Price Index report, really suggesting that we're on the fastest pace of increase in terms of prices increasing across a variety of goods since the summer of 2008. So that was the headline that resulted in a good amount of volatility in the marketplace, both for day trading purposes in the broader index markets. So we'll start by taking a look at the S&P, the Dow, the Nasdaq, and the Russell. Hint there was the S&P and the Nasdaq a bit stronger compared to the Dow and the Russell today, at least off of the volatility, buying the dip. We saw more buyers coming into the S&P and the Nasdaq, and I'll show you what that looks like in a second. That's what we'll start the video off with, spend maybe a minute or two looking at that, and then I'd like to really spend a majority of the time taking a look at potential swing trades here that are still active, still valid, still giving us good entry prices, and using today's volatility as a means of capitalizing on this quote-unquote opportunity to try and profit from the marketplace. So let's start off first with the S&P 500. Now on our daily time frame here, what should stand out is we have an active slingshot squeeze. We've had 1 and 2 edge signal confirmations. The edge signal suggests that we're in overbought or oversold territory, in this case oversold, which is really hard to believe considering we made all-time highs today. However, the signal printed, so the signal is true, but the real level that I think acts as a magnet still headed into the summer months is 4153.62, which is the 1618 extension of this overall longer-term swing high to swing low, where it seems more likely that we'll retest that prior to making a move towards 46.21. Now, of course, anything can happen, and that's where the intraday volatility comes into play. So for example here, in the S&P 500, we were on our aggressive volatility box for all day trading purposes to start off the day, and this was true for all 4 index markets today, where in the S&P 500, we had towards the edge of the 7 to 8 a.m. Pacific hour, a good amount of volatility really hit the marketplace across the board. So in the S&P, that came in the form of price action breaching our sign entry lines. This is our normal entry zone using the aggressive volatility box. You had price action breach, give you the oversold confirmation, and really from there, the S&P continued to rally, hitting both T1 and T2, which is this gray target line. Now, the one thing to call out is this is a much more aggressive trade. This is an edge of hour trade. It's one that I personally like to ignore, but for those of you that are a bit more aggressive, this was a zone in which you really had the opportunity to try and capture this reversal. Now, you contrast this with, say, the Dow. And what should stand out is the Dow did not have as much buying activity come through. The Dow here, we fell inside of our sign entry line. We bounced from there, but we failed to hit our gray target line on the other side compared to something like, say, the S&P or even the Nasdaq, for example. If you take a look at the Nasdaq here had a good amount of buyers come right back in, so much so that we started the morning off rallying into our aggressive volatility box. From here, we essentially fell short. Then you had volatility come right inside of our long zones. From our long zones, bounce from there, hit T1 and T2, and then continue to really go above that into the close. So more strength in the Nasdaq, more strength in the S&P, less strength in the Dow futures. And finally, if we switch to the Russell futures here, Russell looked very similar to the Dow, where price action really just tagged our sign entry line, bounced up from there, gave you T1, then came right back down and retested that same level, taking you out of any remaining positions. So the key takeaway here in terms of day trading using the volatility we saw from the CPI numbers, the S&P and the Nasdaq gave you the biggest winners, let's call it, with our first targets and our second targets being met. The Dow and the Russell, a little bit weaker, where we had only the first targets being met, and then we saw sellers come right back into the marketplace. Now, if we switch gears and take a look at some swing trading opportunities, for that, let me come into our daily time frame chart. I'll load in our squeeze indicators along with our moving averages. The blue line here is the 8-period exponential. Then you have the 21 exponential. This gray line is the market pulse, which is a free indicator. The gold/yellow line that's not dotted is the 34 EMA. Then you have the 50 SMA, and then finally there should be a white dotted line, which is the 200 SMA. So now taking a look at our stocks that hit our slingshot squeeze, using not only our scan, but also our back tester here, there are a few that stood out. The first was Bristol Myers. Bristol Myers here over the past 5 years, 2 winners, 0 losers. Not a whole lot of data points, but the fact that we've been at a 100% win rate so far does bode well to add Bristol Myers to a watch list, looking for a pullback to any one of these moving averages as our means of getting a better entry price. Market pulse here, I think, makes the most sense, and that gives you a price of 65.28. So if we had a pullback in Bristol Myers down to 65.28, I think that would be a good way to essentially reduce this risk to reward, or skew it rather in your favor, and take advantage of this overall squeeze squeeze, which at least traditionally has performed well. Now, some other stocks that stood out, you had PerkinElmer. Here we've had 7 winners, 1 loser. This is again, same 5-year period that we're backtesting. The one thing that stands out here is the average winner, 3.51%, but the average loser is almost double that at negative 7.1%, where again, the idea of waiting for a pullback, if we do have, say, a sell-off day to close out this week, I think that makes for a phenomenal opportunity to try and enter PKI, where you do have the sell-off for a better price, but you know that this overall trend, this overall squeeze tends to fire bullishly. Now, in all these cases, the exit criteria is still when the squeeze fires, which is the first green dot that you see. Now, next up, in terms of the list that was interesting, we had 3 different TIPS ETFs that hit the board. And the one that backtests the best is the TIP ETF here over the past 5 years. 4 winners, 1 loser. Now, the winners and losers here are quite a bit smaller. Keep that in mind. This is an ETF, which doesn't move a whole lot. 0.43% for the average winner, negative 0.92% for the loser. And so, again, we'd like to reduce this loss if we can. And the way to do that, in my opinion, is still waiting for a pullback opportunity. The market pulse here is a bit more aggressive, 127.24, but you really have this entire zone between 127.24 and 127.50 to essentially get into TIP, especially as a potential inflation hedge or maybe a defense against inflation. This would be a good way, in my opinion, to try and play that move where you have not only the technical signals that essentially support this idea, but also the overall narrative and the theme in the marketplace supporting this idea that TIPS continues to go up higher. If you contrast this with some of the other ones like the Schwab TIPS ETF, you'll see that just doesn't backtest as well. 3 winners, 2 losers. The S&P version of this, 2 winners, 1 loser. And if you compare this to the TIP ETF, which is the iShares version, 4 winners, 1 loser. So I think all of that just adds to this value. And then finally, I know a majority of you would be looking at XLV, the healthcare ETF, but that too just has not backtested all that well with the actual squeeze that we see forming. And so that's not one that necessarily is exciting for me to be looking at playing, especially when you have slightly more attractive tickers like PKI on your radar. All right, I hope this video was helpful for everyone. Take care, good luck trading, and we'll see you in the next update.